a very high level overview. Some of the things I saw this week were, first of all, obviously we're still trading in this, 32 to 40K range, a little over, 15% of Bitcoin's money supply is now moved in this range. So we're kind of building up this pretty large base of capital here. Hash rate has continued to trend down. At one point it dipped down to the lowest point it's been since late 2019. So of course, block intervals are a little larger than the traditional 10-minute time frame. At one point, they got over 23 minutes, which of course it means that issuance is slowed. But on the bright side, the difficulty adjustment should be coming in the next few days. I think on Sunday, people are projecting it to be. And miners are slightly selling, but in the Glassnode data, it doesn't appear that it's anything substantial, right? There's been a big narrative that miners have been dumping, and that's what's been really driving the price. But in the data that at least I'm looking at, it doesn't appear that way. Younger coins continue to sell generally, but this week we had the largest day of net realized losses in Bitcoin's history in dollar terms, which I think is important because we've had other very large capitulation events, but obviously in the larger Bitcoin grows, in dollar terms, these events are going to be larger. So still no major uptick in whales. This is something we've kind of been tracking, watching for new whales coming on the network. But at the same time, retail has been adding aggressively, over the last 2-3 weeks, especially. It seems like the smaller cohorts, the shrimp, as Glassnode likes to label them, under 1 BTC, they continue to add aggressively to their holdings. And just in general, the kind of reaccumulation continues, and exchange flows are kind of sideways to bullish. So, nothing crazy in terms of those things, just kind of continuation of what we've been following over the last 2 weeks.